Welcome to Short-View Trading. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Long View Economics and Short-View Trading. This is your morning market hit for Monday, 19th of February. It's around 9 a.m. London time. And if you want to trade equity index futures on a 1 to 2 week basis, you want to be a swing trader of the S&P 500, futures, or the Nasdaq, the DAX, the FTSE, what should you be looking at? What should you be thinking about? What kind of factors matter on that 1 to 2 week time frame? That's what we're going to get into in this video. So the first thing we need to think about is the context of the market's recent price action. This week's a pretty key week because of what happened last week. Last week, the market seemed to run out of steam. The US CPI on Tuesday was worse than expected, both at a headline and core level, and so was producer price inflation on Friday. Both of those knocked the market as bond yields backed up, rate cuts were priced out of the market, and tech and the US equity market struggled. Indeed, it was the first week in 5 that we had a down week for the S&P 500, Nasdaq and other key US equity indices, as you can see on that chart that we've been putting up in front of you. Weekly performances were negative largely across the board in the US, with some exceptions, but led by tech, led by the Nasdaq 100 to the downside. And as mentioned, that was the first down week in 5 and only the second down week in 16 since the start of this significant rally in early November last year. And it wasn't just the tech index and the S&P 500. Interestingly, the key leadership stocks also struggled. If you look at the Magnificent Seven, some of them are really generating pretty poor price action. Take Apple, one of the largest stocks in the global stock market, struggling at its 200-day moving average, as you can see from the chart in front of you now. Or look at Google, Alphabet, as it's officially known, now struggling at its 50-day moving average, sitting right on that key support level. Is it going to break through? Clearly had a tough week last week. And even Nvidia, the great leadership stock of this year, the best performing Magnificent Seven stock and the best performing major stock in the global stock market, Nvidia itself looks as though its momentum may be stalling. And in many ways, perhaps that's not surprising if you think about the price action of Nvidia over recent months, or indeed the last 18 months, it's up around 7 times. It's gone parabolic. And then if you look at our overextended indicator for the stock, that is looking at its price relative to its 50-day moving average, it's very overextended at a 2 standard deviation level, which historically has been a pretty negative signal for the stock itself. Or indeed, if you look at the Nasdaq put to call ratio that we're putting up in front of you now, you can see that's also been on sell of late, and is another reason to be cautious on tech at this juncture. So the big question for markets is the following: is rotation happening? Is sector leadership changing? Or is the stock market actually rolling over? These are the sort of questions we address each and every day in our Rag Trader publication, where we update all our market timing models, our key 1 to 2 week models for timing entry and exit points into long and short trades on equity index futures, and where we also update our thinking about the market and our market commentary and our recommendation on the equity index. So if you're interested in a free trial of that, please click on the link below. We'll send you the Rag Trader for free for a few weeks. No credit card details required, simply your name and email address. Or if you're already a subscriber, it'll be in your inbox around 8:30, 9 a.m. London time each and every business trading day. So what are you watching today and this week? Well, there are 3 key themes in terms of data releases and earnings that are coming out over the course of this week. Firstly, and most importantly, is the earnings of Nvidia coming out on Wednesday. Given all that I just said, of course, this is a key catalyst potentially to add to its loss of momentum and potentially lead to it to roll over, or maybe it'll reignite the upside momentum. But those earnings are critical. They'll be watched closely on Wednesday. Secondly, we've got flash PMIs from across the globe on Thursday: Europe, the States, North America, and parts of Asia, where we get a quick take on economic activity in the first half of February, an early take on February's global economic activity. And then finally, we've got bits and pieces of economic data with the US Conference Board leading economic indicators on Tuesday, German IFO on Friday, and 1 or 2 other pieces over the course of this week. So that's it from us. That's your morning market hit for Monday, 19th of February. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and like and share on social media, or follow us on Facebook, Twitter, and or LinkedIn. Thank you for listening. Stay safe, trade well.